Welcome back, viewers. You're watching the Savera and I'm Shefali. In a major escalation of trade tensions, the United States announced a 25% tariff on all Indian imports effective August 1. The measure introduced by President Donald Trump as part of a broader protectionist shift is expected to pose significant challenges for India's export-driven industries and could have implications for economic growth forecasts. India now faces a steeper tariff bearer than several of its key global competitors, while countries such as the United Kingdom and the European Union has negotiated relatively lower rates, 10% and 15% respectively. India's tariff exposed stand well above those levels. Southwest Asian economies like Vietnam, that's 20%, the Philippines 20% again, and the Indonesia 19%, many of which directly compete with India in global markets, have also secured better terms. Only China, currently facing a 30% tariff, has a higher rate, though it remains engaged in ongoing negotiations with the US. Malaysia shares India's 25% rate. Sectorial volatility and export risks. Now, the impact of the new tariff is expected to be uneven across sectors, with industries heavily reliant on the US market being the most vulnerable. These include electronics, textiles, garments, gems and jewelry, pharmaceuticals and auto components. All of these will generate a marginal portion of their export revenue from the US. Electronics, particularly electric machinery and smartphones, represent India's largest export category to the US, with outbound trade in 2024 valued at approximately $12 billion. Industry experts believe that the new tariff regime would disrupt establishment supply chains and reduce India's price competitiveness relative to other Asian economies. In the textile and apparel segment, the United States remain India's largest export market, accounting for around 28% of total shipments. Analysts warn that the new tariffs may accelerate the erosion of India's market share, especially as lower-cost producers like Bangladesh and Vietnam continue to gain traction. Concerns have been raised about displacement in key product categories such as garments, linens, and home textiles. Companies such as Welspun India, KPR Mill, and Vardhaman Textile may face headwinds, though analysts caution that the market reaction is likely to be as much sentiment-driven as fundamental-based. The gems and jewelry industry also finds itself in a precautionary position. The US accounts for over $10 billion, or nearly one-third of India's export in this sector. Industry observers expect the blanket tariff to inflate operational costs, delay shipments, distort pricing models, and put significant strain across the value chain, from small-scale artisans to major exports. Pharmaceuticals, safe for now, but uncertainty ahead. Now, while Indian pharmaceutical exports are currently exempt from the 25% duties, the sector remains cautious. Experts point to President Trump's earlier remarks, which suggest that pharmaceutical manufacturers could face a tariff of up to 200% if they fail to relocate production to the US within the next 12 to 18 months. Though such high duties are viewed as politically unviable, given their potential to increase healthcare costs in the US, the ongoing Section 232 investigation into pharmaceutical imports continue to cast a shadow over the sector's long-term outlook. According to analysts at Kotak Institutional Equities, India supplies roughly 45% of generic drugs and up to 15% of biosimilars to the US by volume. This significant role in the American healthcare ecosystem provides some insulation, though not immunity, from future policy shifts. Companies like Cipla and Piramal Pharma will establish manufacturing bases in the US are likely to be better positioned to manage any regulatory fallout. Other sectors, now mixed outlooks. In the auto components industry, although many export remains exempt from direct tariff under Section 232 provisions, the sector is not entirely shielded. Leading manufacturers such as Bharat Forge, Samvardhan Manufacturing International, and Bosch Limited, who generate a substantial portion of revenue from North America, may feel the effect of demand slowdowns or logistic disruptions. The steel and aluminium sector, already subjected to earlier tariff under Section 232, has been excluded from the latest measures. Nevertheless, companies in this place, including Handalco, Tata Steel and JSW Steel, may still experience volatility due to broader market uncertainty and shift in global pricing. In contrast, India's energy and oil sectors appear largely unaffected. Most petroleum products and electricity-related commodities have received exemptions, shielding listed players like ONGC and Oil India from immediate tariff-related impacts. However, some complexity remains, especially around the resale of proceeds Russian oil, a matter that could invite additional security scrutiny in Western markets. Technology sector. The indirect impact likely. Now, while not directly impacted by the new tariffs, India's information technology sector, particularly large-cap firms with exposure to US clients, may face indirect measure due to microeconomics tightening in the US. Discretionary spending on technology by American corporations is already showing signs of contraction, and the rising cost base many intensifies budget constraints. Companies like Infosys, HCL Technologies, LT Mindtree and Tech Mahindra, with significant exposure to US retail and manufacturing sectors, may bear the brunt of any slowdown, whereas firms with more diverse portfolios like Coforge or Mphasis could prove more resilient. Investor segment and microeconomics implications. Analysis across the broad view the US decision as a negative signal for market sentiment, though many believe a portion of the potential impact has already been priced in. Outlook for GDP and policy response. Economists warn that a prolonged delay in reaching a trade agreement with the US could affect India's GDP growth outlook for financial year 2026. While the current fundamentals remain robust, supported by strong domestic demand, a favorable monsoon season, and healthy rural consumption trends, continued uncertainty in trade policy poses risk. However, some experts have highlighted that India's economy remains relatively inward-focused compared to the regional peers. Overall, while the immediate fallout from the US tariff hike remains sector-specific, for broader implications for India's trade policy, investor segment and diplomatic posture are likely to unfold in the coming months. That's all for now on this update. Stay tuned to the Savera, download the app and follow us on various social media platforms.